Hi, this is Miss Nix, and this is the third part of the video series on journalizing and posting to the Ledger accounts. In the last video, I discussed with you how to journalize. Now I'm going to explain to you how to take the journal entries to the Ledger accounts. If you'll recall, working problem 2-2B in your book on page 87 and 88, we journalized the first three transactions. So, now what do? When we finish journalizing, we're going to take each of these accounts to their individual ledger accounts. Okay, so April 1st we had a debit to cash. You're going to go over to the working papers, and this is my key, so I'm going to show you just parts of it. Alright, cash. This is the cash ledger account. It's an individual account, and we keep a running balance. Right up here to the right side, you can see that cash has, all of these have an account number. Cash's number is 101. Alright, for April 1st, we debited $20,000. The reference right here, J1, that refers to the journal page number. You can find the journal page number back over here on your journal, and that just means the first page. In the real world, you're going to have so many pages that you're going to need to keep up with that. So that's telling me that I've posted April 1st $20,000 to this ledger account. Now, back over here on the journal, I have account number 101. So I'm going to reference 101 right here. That tells me I can go to reference account number 101 and find this information. Then I'm going to go to the capital account. The capital account is owner's capital right here. On April 1st, I credited, so you make sure you put it on the credit, and our balance is credit. Again, we're going to journal J1. The account number for owner's capital is 301. We're going to go back over here, 301, and that's our cross-reference. Okay, a couple of comments about these ledger accounts, and again, these are my keys, so I wanted to give you what it looks like as a whole. This is cash. You're going to need to know what the normal balance of cash is in order to know whether you add or subtract each balance. Okay, cash has a debit balance. So when we debit, that is a $20,000 increase. However, when we credit, it subtracts from the balance. So we take this $20,000 minus the $1,100, and now we have a balance of $18,900. On the 11th of April, if you see here, we debited $1,000. That increases it back up to $19,900. You will want to keep a running balance at all times. Looking at your capital account, or let's go to service revenue because it has a credit balance. On April 10th, we credited $5,100. Now our balance is $5,100. On the 20th, we credited again. You will add 2 credits because the credit is the normal balance of revenue. Now our balance is $7,200. For if any reason you have to debit revenue, it will decrease that balance. So again, it is important to know what your balances are in each account. After you complete all of your postings to the ledger, then you'll have a balance in each account. After that, you will want to make a trial balance, and a trial balance is a list of all of your accounts. If you'll notice, here you have the name of the business, the name of the form, and the date. You're going to line up all of your accounts in order. Then you're going to put whether they are a debit or a credit. If you put cash over here on the credit column, it will be incorrect because cash has a debit balance. After you complete this part, you will add your columns up, and guess what? Yes, you should balance. At this point, if you do not balance, do not panic. More than likely, you've made maybe one mistake, probably on your journal. Go back to your journal and make sure that you have journalized everything completely. And in fact, if you cannot find that, just walk away from it for a little while. Now, as I move this back around, I hope that this little small lecture has helped you. Just a couple of other comments. Unearned revenue. What in the world is unearned revenue? Well, unearned revenue is revenue that we haven't earned yet. So let's think about that. Let's say that we're going to perform a concert and we're going to sell tickets. As we sell tickets, we receive cash, correct? So we have to put the cash in. We debit cash. But have we actually performed the services? No. And if we never put on that concert, what happens? We have to return the money to the people. So until we have the concert, it becomes a liability to us. So we will credit unearned revenue because unearned revenue is a liability. Now, whenever we actually perform the concert, then we'll do a journal entry. We will debit unearned revenue to take the money out of that liability account and move it into our revenue account. Other ideas or examples of unearned revenue might be memberships. It might be gift certificates or coupon books. I believe one of your examples in the book is a golf course, and they sell coupon books. When they sell the coupon books, they receive the cash. But did the person actually golf that day, which is what they're in the business for? And the answer is no. So we're going to debit cash because we receive the cash, but we will credit unearned revenue. Then, when the customer comes in with their coupon book, we will take the coupon book, then we will make a journal entry to debit unearned revenue and credit our revenue account. I hope that this short video and explanation has helped you somewhat. Again, now I'm telling you that if you've been watching this video, if you will send me an email in Angel telling me that you've watched the video and give me or provide me with some feedback, I will add 10 points, that's right, 10 points to your first exam. You must send me the email before the end of when the exam is due, and that's exam 1 over chapters 1 and 2. And just a couple of comments about the exam. Please be prepared before you begin. You will not have time to look up every answer. You will only want to use your book as a backup. So make sure that you've read and you understand the information in there. Good luck in accounting. I hope you're having fun with it. Let me know if I can help.